Good afternoon, everyone, and welcome to Stock Market Today for Monday, May 19th. It's Alissa Coram here, and the resiliency of this strong bull market continues with stocks shaking off that Moody's downgrade news over the weekend. And joining me now to discuss today's action is my colleague, Justin Nielsen. Justin, what a day it was.
Yeah, I mean, given the open and given the action kind of on the futures market, I don't think anyone necessarily was expecting this. But hey, when you get it, it does show you something about the market. And we'll get into that. And we'll also get into some stocks, including stock of the day today, Broadcom. Those of you that might not recognize the name from the symbol, it's AVGO because of the old thing. We'll also talk about Visa and GE Vernova, GEV.
Yeah, we will take a look at all of those
Oh,
stocks.
I do have a position in GEV. Excuse me. Sorry.
Okay, great. All good. You know, we're all about the disclosures over here. Let's take a look at the major indexes. Look at this upside reversal for the NASDAQ, closing in slightly positive territory after a pretty substantial down open. Meanwhile, the S&P 500 also reversing higher on the day, up about 0.1%. The Dow up 0.3% on the day. The Russell did lag, down about 0.5%, but closed well off of its lows. So Justin, like you said, the news flow over the weekend looked like it was going to be kind of a grim day after so much strength that we've seen in recent weeks. But immediately we saw some buyers stepping in the literal opening minutes of trade.
Yeah, and just to catch everyone up in case they didn't see the news, there was a Moody's downgrade on the U.S. sovereign credit rating, basically because of the sovereign debt ratio and how it compares to other nations and everything. So look, it's not great, but it's also, I don't think anyone's big surprise of, okay,
Right.
yeah, we've got a lot of debt. It's one of those things that you don't want to see continue for very long. And so the downgrade in the credit rating did hit markets initially over the weekend. That news came out right after the close on Friday. And so there was a little angst on what that was going to do for markets at the open. And you saw that happen immediately. But this is why we wait sometimes. Just waiting for the first 5-minute bar can sometimes give you a big leg up, because if you look at the first 5-minute bar and you just set a level at the low of that 5-minute bar, or some people like to use a 10-minute bar, first 15-minute bar, but just give it a little bit of time to see, hey, what is the reaction going to be to this news? Because a lot of times what happens over the weekend or in aftermarket can be very different once the full liquidity comes into force with the market open. And that's exactly what we saw this time. The low was basically the open, and it just kind of recovered from there. Just to give you some stats here, I was, doing some calculations. We, closed up, just slightly positive on the NASDAQ composite, but that was 1.5% off the low, so from the open. That's a lot of distance to go in a day. For the Qs, it was about 1.5%, and for the S&P 500, no slouch, 1% there. So you mentioned IWM and the Russell 2000. Look, this has been in the penalty box for a little bit. If you can't even get above your 200-day moving average line, and that puts you in a different category, but still, it was like most things, well off its lows, and almost everything closing in the top 10%, 5% even of its closing range. So
Wow.
that's some power here. This is showing you resilience, a market that doesn't want to go down. So rather than panicking and necessarily doing a lot of selling, you certainly could have done some of that to ease pressure if you were maybe over your skis a little bit. If you go to the 5-minute chart, here's an example of what we were doing on Swing Trader. We had gotten way out on margin. And so we took some of the opportunity to sell some just down to a level where we could handle pressure a little bit better as we were rebounding. So we took advantage of that rebound to kind of sell down some of our positions without taking big losses, either keeping losses small or in a lot of cases, just keeping the profits that we had on positions. So
Right.
there's nothing wrong with doing some selling if you need to adjust your position size or exposure level. But as was probably talked about last week, we do have a power trend now, and we do want to kind of lean a little bit more into the bullish phase of this market cycle.
That we do. And Justin, you talked about being patient on the intraday time frame, and I think there's lessons in patience using multiple time frames. So I love
Absolutely.
the strategy that you talked through. Also, I think if you put things in perspective on the weekly chart, headed into this week, the Nasdaq was up 7%, 7.5% the previous week
Yeah.
after a big move. Like you said, we're in this power trend. It seemed like almost on a daily basis over the last couple of weeks ever since that follow through day on April 22nd, we're just checking box off after box off for the bulls. So, when I was digesting this news as an investor over the weekend, I wanted to put it into context. When I was looking at futures, okay, so if we're set for a 1.5% down open for the Qs, well, hey, the Nasdaq was up 7.5% last week. Let me look at the weekly charts, not only on the index level, but also for my stocks that I now have cushion on, because as active investors, we've been adding exposure over the last couple of weeks, not all of a sudden getting bullish at the end of last week, right when the power trend turns on. So, okay, now that I have this cushion, let me use those weekly charts to see how not only the day goes, but also the week, just to ease that potential panic at the open. Of course, the game plan can change. If you're looking at the intraday charts and you're just seeing selling after selling after selling, you do have to manage your portfolio. But I think that step back is something that helps me put things into perspective, especially now that we are in that power trend mode.
Yeah, and I didn't want to steal your words because I thought you did such a great job of describing that uh, analysis that you're doing for your own personal accounts. On IBD Live this morning. Again, we were starting at 6:20 Pacific time, 9:20 Eastern, to really kind of see how the market was digesting this news, and I think we did a really good walkthrough of that. And your point on the weekly chart, I think, is something that really helps listeners kind of put that in that perspective. Especially, look, sometimes when you get a move down, you have to kind of recognize, when it closes well off its lows, you have to realize, okay, what did it look like at its worst?
Sure.
Because sometimes it looked pretty bad. But in this case, stepping back to that weekly chart, let's imagine if this had closed at its lows, given
Right.
how much we were up last week, it really wouldn't have
We'll
looked
take
that
it.
bad. It's like,
Yeah,
oh,
not
you're
too bad.
holding your gains. So
Yeah.
that perspective is so important. And so I'm really glad you brought that up.
Well, it's yeah, all about that context. Love
Hmm.
looking at all the different time frames. I mean, hey, why not use all these different tools in your toolbox, right? From the
Right.
intraday to the daily, weekly, monthly, you name it. We love looking at it to give us a different piece of the picture.
Yeah. And
Okay.
at the end of the day, what ended up happening because of this move is we kind of undercut, some of the lows of the last few days. And, personally, I would have preferred for it to happen over a couple days. And
Right.
then, the third day, that's kind of a typical upside reversal day. It gives you a chance to buy more setups that are in better positions because you can limit your risk by just using the low of the day as your stop. But you can still do that with any setups you saw today. This kind
Mhm.
of set up another test of that low from the past few days. And it ended up kind of being what we call an
Yeah.
engulfing bar, because the highs of today and the lows of today kind of engulfed the last 3 days. And when you close at the top of the range, where you close really matters in that case. When you close at the top of the range, it's kind of the market saying, look, my tendency is to go up from here. That's what usually happens. Not always, no guarantees. That's just the way the market works. But there is a tendency when you see these engulfing bars that close at the top of the range for that to continue the next
Mhm.
next day or so.
Yeah, I think it's going to be interesting to see how this week plays out because I think it has felt for a lot of folks like a lockout rally
Yeah.
already.
Right.
So, and you can, and that shows up in the charts. GEV, which we'll get to, but some of the others as well. Just the kinds of setups, the kinds of the action, the strength that we've seen has been tricky for investors with just how strong it's been out there. So could be an interesting week to see how things progress. Are we going to see some sideways action, a pullback, more buying opportunities to develop, or are we going to keep running? Because this rally is quite strong at this
Mhm.
time.
Absolutely.
Okay, let's move on, Justin, and take a look at some ETFs. Gold, for one, bounced today off of the 50-day line, GLD, up 1.3%. We've been waiting for a pullback in gold, and it has been developing over the last couple of weeks, especially as stocks have strengthened. But it seems like with the action today, Justin, a pretty reasonable risk reward ratio with that pullback to the 50-day and a bounce.
Yeah, the chart doesn't look too bad to me. The fact that it got that support of the 50-day moving average line, kind of crossing a very steep trend line, if you will, if you started at that 315.62. But now it kind of comes down to, well, gold was doing best when our market was in the doldrums, and so once the market started
Mhm.
recovering, you can see that gold, kind of almost, went through a little bit of a climactic action. This is something that Scott St. Clair was talking about on IBD Live. Went through a little bit of a climactic action, and then really hasn't done much since then. So it's not a bad hedge, because again, if you think that the market could come in a little bit, you could hedge a little bit with the GLD position, or a lot of times we'll go with GDX, which is the gold miners, because there's a little bit of leverage there. But
Mhm.
GLD, frankly, looks a little bit better because it got that support at the 50-day moving average line. So it's an option, but right now, I'll be honest with you, I'm kind of leaning into the bullish and growth. I'm not hedging too much.
Yeah. It just seems like if you were gonna do it, if you've been looking at this move in gold thinking, all right, I'm waiting for a pullback to get in, well, we've gotten it. So that 50-day line is about 2.1% below today's close. Let's
Mhm.
also take a look at the new gold IBIT, one of the Bitcoin ETFs. Full disclosure, I do own this one. Are you in it as well, Justin?
I am as well. Yeah.
Okay. So
Mhm.
an outside day, upside reversal, up 1.3%, closing near the highs, like a lot of stocks and ETFs did today, as you pointed out. But to me, with the strength here, this was something that I opted to add to today, just a little bit, just a little
Mhm.
sprinkling here, given the strength versus the broad market. Also, I do believe there was a little bit of news here. JP Morgan CEO Jamie Dimon saying that the bank will let clients buy Bitcoin. So you're continuing to see this democratization of cryptocurrency.
Yeah, and acceptance, right? I mean, it really kind of, as it started getting a little bit more okay, more investors were comfortable with it. As you started saying, okay, the SEC is kind of giving it okay for ETFs to be created, and now JP Morgan coming out. There's a little bit more of that acceptance of this as a legitimate investment, as opposed to a Wild West frontier, type thing. So look, the outside day, as you mentioned, very, very interesting. You know what? I meant to add to this myself, and I just ran out of time. It was one of those things I was typing
Happens
up,
to the
but
best of
yeah.
us.
I like the setup. Whenever you get tight action, you a lot of
Mhm.
times I look at that and say, okay, this is going to resolve itself one way or another. When you get like a tight little trading range, it's either going to kind of break up to the upside, or break down to the downside. And in this case, we got that break to the upside, and so that's a positive look to it. I started buying this at around 50 as it got back above its 50-day moving average line. I've added a few times, and I think this was
Mhm.
a great add on your part, Allie. I wish I had been there right with you. Next time, can you
You
just give
meant
me a
to.
call?
You meant to. Yeah.
Yeah,
Good stuff.
Mentu doesn't really do much for your account, I'll be honest.
I know. It's happened to all of us.
Yeah.
We get busy.
Yeah.
Okay, let's move on and chat about some stocks. So, first, we want to take a look at our stock of the day today, Broadcom, ticker ABGO, an upside reversal here. Justin, what I think has been impressive about the market rally over the last couple of weeks is perhaps to some investors' relief, the chip sector finally starting to make a comeback. You have stocks like Broadcom and Nvidia and others participating when they've been sitting out and underperforming for quite a while.
Yeah, I probably should have had you take a look at SMH in that regard, which is our VanEck
Yeah.
Semiconductor ETF. A nice pullback. So this is kind of more what I was looking for the market to do, where you get that 2 days down. The last day does a final shakeout below the lows, and then it closes at the top of the range. That's kind of your classic upside reversal. And SMH, had that look. And not only that, but it was so resilient. It just was not really wanting to come down. So it would come down and then close at the highs, come down a little bit, close at the highs. And this was kind of a shakeout. But again, closing at the highs. An opportunity there, I think, for SMH and for Broadcom. That's your shakeout right there. And the benefit of sometimes that pullback that you see is that it can offer an opportunity for you to get into something where you can really manage your risk. That low of the day becomes kind of a floor. If it goes lower than that, okay, something's wrong with my entry. Not that the stock is broken or that it's never going to work again, or should even fall off your radar. It just means that your timing might have been a little bit off. But the fact that it came down right to the level of the low from the previous week, I think that was Tuesday. It just shows, hey, this is a level of support that is holding, and it just gives you a really nice a way to manage your risk. And this is something you and I talked about with your position in Uber when you got that. And I have a position in that as well as you. How you use that kind of reversal as an opportunity to get into something where you could manage your risk better. And I think that's exactly what Broadcom offered here. You could have been buying it as it was, sticking straight up, but now it's kind of an easier buy because you can manage that risk, better. If you had bought it on Tuesday of last week, it's sticking straight up, kind of, okay, well, where do you put your stop? I mean, you could do it from that day's low, but this is a much, I think, easier
Mhm.
easier look, and it really clearly tells you when you're wrong.
Yeah, we really like those reversals a lot. An interesting or compelling place to initiate a position. And then if you wanted to add above the recent highs, if this market can continue to gain steam, then perhaps that's a way to scale in even more. We do have earnings coming up in about 2.5 weeks. So I do want to point that
Mhm.
out. Also, looking to the left, I love this draw the line
Yeah.
type analysis that we can do. It does look like there is a little bit of congestion around the recent highs if you go back to where it was trading in January, February, even back to December. So I think punching through that level would be pretty notable for the
Mhm.
stock.
And I'll be honest, I love when a stock will get to that level of congestion or resistance, kind of pause a little bit, pull back, and then again, it just kind of gives you, in this case, an easy way to manage your risk. And if it goes up, punches through, hey, you were right. If it undercuts the low, you were wrong. Sometimes I like that clear cut,
Yeah.
no gray there.
Yeah, exactly. Okay. Next on our list, let's take a look at a new addition to leaderboard, and that is Visa, a steady Eddie name in the finance sector, breaking out today.
Yeah, and so look, you could have been looking at this as a double bottom with an early entry at 351, and then you have kind of this other entry at the highs at 366.54. It's a lot of days up, and to be fair, the relative strength is not participating as much because this is a slower mover, and so sometimes the slower movers are just going to have some lagging relative strength. But instead of having a portfolio full of heat, because
Right.
again, on a day like today, that might be a little bit more difficult, as the open happens and you feel that pressure. It can kind of make you do things that kind of panic a little bit. So kind of having some of these to reduce some of that volatility, some lower ATR stocks, ATR standing for average true range, can kind of help you weather the storm. But I, as much as, this is kind of sticking up there, I wouldn't let it drop off your radar, because if this does pull back a little bit, kind of around this area of prior resistance, that's something that could absolutely offer another chance at it. And look, XLF, we were talking about again this morning. XLF not looking too bad. I do have a position in XLF, so that's where my Visa exposure is. And this is not looking too bad. Again, a little bit of a lagging relative strength, but as you pointed out on that weekly chart, especially for Visa, it's looking pretty strong on the relative strength overall.
Exactly. Yeah. Over time, we're definitely seeing that outperformance for financials here for about a year or so
Hmm.
versus the broad market. Okay, let's now go to GEV, a swing trader name, strengthened throughout the day. Really impressive power here. One of the ones that we were looking at early on in the day. I feel like it was one of the first to sort
Yeah.
of, at least in that kind of high octane, growthy, near highs category that we saw that turned green on the day and finished with a relative strength line at new highs. Shares up 4.3%. That's GE Vernova, ticker
Yeah.
GEV, Justin.
And so, look, this is one where, of course, after the DeepSeek news, you can see that big gap down that happened where, again, usually you think of energy and utility stocks, not really being correlated to growth and tech, but these stocks were very highly correlated to AI stocks. I mean, they were more correlated to Nvidia than they were to your typical defensive areas or inverse correlations to the market. And so we really, that was a concern, but the market has really kind of recovered nicely. A lot of these names have recovered. Another way that we've been playing this is with UTES, which is a utility ETF that you can see, again, took a heavy hit on the DeepSeek day on January 27th, but has really recovered nicely back to highs. And getting back to GEV, this is kind of a similar situation as what we were talking about before. It gives you a nice area of, okay, you pulled back. Using the lows is a great way. So this is one that I did add to today. I had the position, I kind of sold it, and then bought a little bit more when I bought it back after the swing trader restriction. So a nice little short handle, if you will. Maybe taking some liberties there, but it just really strengthened throughout the day. And looks good. So we kind of, just to kind of recap, we got you your Broadcom from investors.com, we got your Visa from Leaderboard, and we got your GEV from Swing Trader. So we're covering the gambit of ideas that we're trying to give our subscribers every
Yeah.
day.
Yeah, a little something for everyone. And I really love the fundamental story here with GE Vernova in that AI power generation space and the triple digit growth. You've got to love that, Justin. And the price action in recent weeks definitely confirming its reassertion of leadership, which is really nice to see. And in terms of what I was talking about earlier, with it feeling sort of like a lockout rally, having these reversals in the
Yeah.
toolkit is something that I think investors are leaning on right now, because we're not really getting those longer pauses for those handles or shelves in many cases to develop. So using the reversal out of the toolbox seems like the time and place to be doing it with this power trend that we are seeing.
Yeah, and I think that, if we had to have a word of the day, I think resilience. That's what the market is showing. So, uh, news is going to come. That's just a fact of life. And so you have to be ready for it. But rather than necessarily get ahead of yourself and say, oh, this is the news, I think this is what the market is going to do. That part is fine, but I try not to act. I actually try to react. What does the market do? And then I make my decision after that, because I just believe that the market is smarter than I am. And so I'll let the market make its decision first, and then I just try and stay in phase with it. And I think the market today, again, closing with the NASDAQ composite, made a very clear stand that, look, it doesn't want to go down, even when there's news that you would have expected could have made the market come in a little bit more, especially given how far it was up.
Yeah.
Coming in would have been very normal, but the market just didn't want to do that, and it closed very well. And I think that's a bullish sign for the day.
It sure is. All right, Justin. Well, we'll have to leave it there. We appreciate you taking the time today to break it all down for us.
You're very welcome. Thanks for having me.
All right. And thanks everyone for tuning in. That is it from us for today, but we will be back with more tomorrow morning on IBD Live, our daily morning live stream starting 10 minutes before the opening bell. We look forward to seeing you there. And if you want more Justin, you can catch him on the Investing with IBD podcast on Wednesdays at 5 p.m. Eastern, live on our YouTube channel. So we'll see you tomorrow, everyone. Thanks for tuning in, and we'll be back after the close.